National income and related aggregates. What is national income? It's the sum total of all the income that's earned as factor income by the normal residents of a country during the period of an accounting year. What is factor income? Factor income is all the payments that the producing sector makes to the household sector because they render their services to the producing sector, so in return for which the producing sector pays them factor payment or factor income. So there are only four types of factor income. Let us look at what are they. First being compensation of employees, which they pay for rendering their services. Next being rent, that they pay for the use of their land. Next is interest, that they pay for the use of their capital. Next is profit, that they pay for the use of their entrepreneurial skill. There's one more type of income, that is transfer income. But this income we do not account for the estimation of our national income because it's unearned income. This is income that we've received as gift, as donation, and it's not earned for rendering any kind of services. So it's not included in national income. Now the next term we saw was normal residents. So let us look at who are normal residents. They are the ones who ordinarily reside in a country. Ordinarily reside means they reside in a country for a period of 1 year or more, no matter they are a citizen or not, but they'll be taken as a normal residents of a nation if they reside in that nation for 1 year or more. Okay. Now, and the next being the center of economic interest lies in that country. Center of economic interest means they carry out all the economic activities like production, purchase, and all these things in that particular country which they are normal residents of. So these two categories, if they fulfill, that means they are the normal residents of a country. See, normally in ordinarily reside, it's a period of 1 year or more, okay, but it's free for like students. If students reside in another country for a period of more than 1 year for his education or for medical, um, you know, if a person who's getting his treatment from another country for a period of 1 year stays in that country, he'll not be treated as a resident of that country, because these are like special cases. That's education, that's treatment for which you've gone to another country, okay, you're not settled there, okay. So, yes, national income does not include income of all the non-residents, even if they are the citizens of our country. Right, you got it. Non-residents are the one who are not the residents, and even if they are the citizens, national income is not going to include their income. It's only going to include the income of normal residents of our country. Next, let us look at domestic income. What is domestic income? It's the sum total of factor income that is generated within the domestic territory of a country. Okay, no matter who generates it, it's the normal resident or it's a non-resident. Now it's national income. We already know the sum total of factor income that's earned by the normal resident of a country, no matter where it's generated, within our domestic territory or outside our domestic territory. Now let us see in terms of economics, what is the domestic territory of a country? We can also call it as the economic territory. Okay, so you can see this is a world map, okay, and this is India. So politically we'll tell that this is the territory of India where its outline is marked, okay, but this is not the same in case of economics. See, there are many foreign embassies in India, like the embassy of Pakistan, the embassy of America, the embassy of Europe, the embassy of Japan, the embassy of Russia. So considering that this is the embassy of America, this is of Australia, this is of Japan, this is of Switzerland, so these embassies, they are not the part of our economic territory, okay. So by definition, economic territory is the geographical territory that's administered by a government within which a person, goods and capital circulate freely. So we cannot circulate freely in the American embassy that's located in India within our own political boundary, but we have the complete power to go freely in the Indian embassy that's located in America, and then Indian embassy that's located in South Africa, that's located in Australia, and any other part of the world, okay. So this is not a part of economic territory, this embassy, okay, whereas these all are, okay. I'll just show you better. So for example, this, it's an American embassy located in India. It's not a part of economic territory, whereas the Indian embassy located in America is the part of our economic territory or our domestic territory, okay. And for example, there's an army camp of ours that's set up in Australia, so that is also a part of our domestic territory, although politically it is in Australia. If there's an aircraft of ours that's traveling above the airs of South Africa, still it's a part of our domestic territory. If there's a boat of ours that's here, okay, it's still a part of our domestic territory. Domestic territory is a place within which a person, goods, and the capital can circulate freely. It's administered by our government, okay. So I hope you understood what's domestic territory. Next, let us look at domestic income. Okay, see, now we saw what was domestic income that was generated within the domestic territory of our nation, and here we know that national income is generated by our residents. Okay, so domestic income, it includes the income of non-residents also who live in our domestic territory. So they may not be our residents, okay, but if they live in our domestic territory, then domestic income includes that income, and domestic income does not include the income from the rest of the world. So our residents who live in rest of the world, domestic income does not include their income. So how do we convert domestic income into national income? By adding NFIA. What is NFIA? NFIA is net factor income from abroad. That means in domestic income, if we add the income of all the residents from the rest of the world, okay, means who are the residents of our country but who are not living within our domestic territory, and if we subtract the income of all those who are living in our domestic territory but who are not the normal residents of our country, then we get net factor income from abroad. Okay, and look, if we add net factor income from abroad to our domestic income, then we get the national income. And so from national income, if we have to get the domestic income, then we can subtract the net factor income from abroad to get the domestic income. Now see, domestic income is equal to domestic product. So that means we can say that domestic product plus NFIA is equal to national product, and also national product minus NFIA is equal to domestic products. It's equivalent as we'll tell this. Okay. Now see, we knew from the previous chapter that gross is equal to depreciation plus net. So just if we add domestic product and national product to it, the thing will be same. Like gross domestic product minus depreciation is equal to net domestic product, because we know that gross is equal to net plus dep. So net is equal to gross minus depreciation. Okay. So net domestic product plus depreciation is equal to gross domestic product, and same if we just replace domestic product with national product, the results of gross and net are going to be the same. Okay, so memorize this very clearly, guys. Okay, now see, there's one thing called market price and there's another thing called factor cost. Okay, factor cost is all the costs that we pay to the factors that we pay as factor of payments, right? And see, the market price is equal to the factor cost in case there's no government in our economy. Okay, but if the government steps in, then the government charges tax for certain things, and also it gives subsidies for certain things. Okay, so because it charges tax, so the market price of goods rises. Okay, because the producers will have to pay tax for it, so they'll include it in the factor cost, and then they'll sell it in the market at that cost. And if the government grants subsidies, then the market price reduces. Okay, so to convert the market price into factor cost, we find out the net indirect tax. What is the net indirect tax? Or the tax that the government charges, and if we subtract subsidies from it, we get the net indirect tax. Okay, and if we subtract net indirect tax from the market price, then we'll get the factor cost. And here if we add net indirect tax in the factor cost, we'll get the market price. Okay, so I hope you got what's market price and what's factor cost. Now let us look at the aggregates. Okay, the aggregates that are related to national income. There are 8 aggregates. Okay, and these 8 aggregates are made out of 8 things only. That's gross and net.